एक तेरा, एक मेरा, दो तेरा, दो मेरा, तीन तेरा,
बराबर
तीन मेरा,
बराबर।
50-50 बराबर है।
बराबर।
एवरीथिंग ओके?
Okay.
हैप्पी?
वेरी हैप्पी
No cheating.
नो चीटिंग
Hey guys, welcome back to a brand new episode. By the title of this video, you may have already figured it out. Yes, it's about the share market. In this episode, we will share with you the basics of the stock market, why you have to invest in stocks, and how to get started with investing. Watch till the end, you may find something new to learn. Without any further ado, let's get started. Some of us have that unknown fear of share markets. That's because you may have heard stories of others burning their hands in the stock market, or you yourself tried and had a bad experience. But we also heard about the stories of world's richest people who made all their wealth from share markets. Basically, there are two types of people in the market. The ones who invest for a longer period of time, called as investors, and the others who buy and sell during a shorter period of time or on the same day, called as traders. Both of them seek profits from the share market, but their way of doing this is completely different. Investors focus on the fundamentals, long-term prospects of the company, so on and so forth. They believe in the ideology of the company and often hold the stocks through the ups and downs of the market, whereas traders buy and sell stocks within a shorter period of time and sometimes even within minutes. They focus on the technical factors of the stock, whether it moves up or down. Warren Buffett needs no introduction, and he belongs to the long-term investor category. He also promotes long-term investing to all those who ask him for advice to succeed in the market. If you are new to the market, we highly recommend you to tune your mindset towards long-term investing rather than trading. Trading requires great knowledge and experience, and still you can burn your hands. The stock market is volatile and risky. That's the reason to make spectacular profits or sometimes losses. But if you dedicate yourself to learn, research, and practice, you can achieve financial independence much earlier. In this video, we are not going too deep about the stock market, but just about how you can get into the stream and row along. First things first. Sometime or the other, you might have heard about the terms like shares, stocks, or equities. In simple words, all are the same and represent the ownership in an entity. Many of the companies offer some percentage of their shares to the public. You might be thinking, why do these companies do that? Companies issue shares to raise money from investors. The invested money is then used by the companies for the development and growth of their businesses. Also, it's a cheaper source of funding as compared to bank loans, as there wouldn't be any interest levied. A share market is a place where we can buy or sell shares of those companies. All such companies list their shares in the stock exchanges. In India, the popular two stock exchanges are the National Stock Exchange (NSE) and the Bombay Stock Exchange (BSE). There are many others, but these two are popular. There are about 5,000 companies listed in BSE and more than 1,600 companies in NSE. If you like a particular company like Reliance, Maruti, ITC, or any such big companies and want to be a part of them, it's not that easy. But the best thing about the stock market is even if you own one share of that company, you are one among their investors and shareholders who share the company's profits and sometimes losses. In earlier days, all such shares are bought and sold through a lot of paperwork. Now everything is digital and online. Here comes the role of Demat account. Demat account is an account that allows the investors to hold their shares in an electronic form. Stocks in Demat account remain in dematerialized form where all your stocks are converted from physical to electronic form to increase accessibility. That's why the name Demat account. Apart from shares, the Demat account can also hold bonds, mutual funds, gold bonds, and other similar assets. Once you get a Demat account and want to buy or sell shares in the share market, you cannot do that directly. To facilitate that, there are several licensed intermediary parties known as brokers. Any transaction we perform is carried out through these brokers only. Before getting started with the Demat account opening, we would recommend you to select your broker. There are numerous options out there, and in this video, we are going to suggest 3 options to try. You can choose any of them depending on a variety of factors like charges, brokerage fees, UI, ease of using them, etc. We have chosen Grow app in number 1 because as a beginner, if your risk appetite is low, you can start investing in mutual funds, and once you feel comfortable with the stock market, you can switch to stocks also in the same app. And also, as a limited period offer, there are no charges for opening a Demat account in this app, while the others charge a nominal account opening fee. There are no charges for delivery transactions as well, and the intraday has a fee of ₹20 or 0.01% of the transaction, whichever is lower. Delivery are those stocks that you can hold for as long as you want, and intraday means buying and selling on the same day. So simply saying, no charges for long time investing and a fee of ₹20 for every buy and sell transaction done on the same day. There is an account maintenance charge of ₹25 plus GST per month. These charges are quite similar to other applications as well. The user interface is quite good and the app has dark mode also. We have tried this app and in our experience, there are no complaints till now. Moreover, they do have a channel on YouTube which guides you regarding everything you have to know about the stock market and mutual funds. We haven't been sponsored by them, it's just our personal opinion. Zerodha. Zerodha is one of the popular stock market brokers. Kite app by Zerodha is a feature-rich application that can ease your stock market experience. You can trade stocks and commodities through this app. The charges for account opening are ₹200 for trading and Demat accounts and ₹100 for commodity account, a total of ₹300 for both. There are no charges for delivery transactions and the intraday has a fee of ₹20 or 0.03% of the transaction, whichever is lower. The account maintenance charges for individuals is ₹75 plus GST per month. The app user interface is good and also supports dark mode. It also has apps like Coin for direct mutual funds, Varsity for stock market lessons, Small Cases for theme-based investing, Streak for trading strategies, and many more. If you have expertise in the stock market field, you can take full advantage of these apps. Kite app is so feature-rich that a separate video can be made to cover them all. Do let us know if we should make that video. Upstocks. Upstocks is another big player in the stockbroker field. Like Zerodha, you can trade stocks and commodities through this app. The charges for account opening varies with the combo you select. The base charges are ₹249 plus GST, which adds up to ₹294, and the top tier charges are ₹999 plus GST. They also offer you the brokerage credit to your account based on the combo you select. These brokerage credits can only be used for the intraday transaction. Like earlier, there are no charges for delivery transactions and the intraday has a fee of ₹20 or 0.05% of the transaction, whichever is lower for the basic plan. The account maintenance charges for individuals is ₹25 plus GST per month. This app also supports dark mode and rest of the app experience is similar to that of Zerodha. All these brokers have fixed charges on the transactions compared to several other brokers out there who charge on the percentage of the transaction. For example, ₹20 for each intraday transaction is fixed whether the amount is 100 or 10,000. Whereas other brokers may charge you on a percentage basis where it may be low for small amounts, but as the amount increases, the brokerage charges also pile up. We tried opening accounts with all these brokers and the process is somewhat similar and easy. Moreover, the accounts were opened within 2 working days. All the links are provided in the description box below. You might be thinking, what if I invest my money in shares through a broker and the broker shuts the company and runs away? No need to worry here because all your shares are in your Demat account and not with the broker. Moreover, like all the banks are governed and regulated by RBI, the share market is regulated by the Securities and Exchange Board of India, SEBI. Just in case if you are thinking, what's the difference between stocks and mutual funds? In the case of stocks, we are directly investing in companies and buying ownership in their businesses. Whereas mutual funds pool money together from several investors and invest that amount in different equities. These can be considered as the medium to invest indirectly in stocks. We don't deal with the companies directly, but the amount we have invested will be diversified and invested in companies by the fund manager of that mutual fund who is a market expert. In mutual funds, you can just invest and avoid some of the complicated decision making that is involved with investing in stocks. In the end, everything depends on your risk appetite. Risk appetite is your capability to take risk and to what extent you can be able to bear losses. The higher the risk, the higher the returns are, and vice versa. We have explained what is stock market and how to get started with the stock market. Now, the big question is,
क्या कीजिएगा इस धनराशि का?
why to invest in stock market? Some say high returns, some say easy money, and some say addiction. For me, it's financial independence because one day I don't want to think twice about the price. Everybody tells you to save money, but I say don't save money, rather invest it because with time the money will lose its value if it is sitting idle in the form of cash. Let the money work for you and generate more money. Moreover, if we compare today with 10 years ago, for the same 100 rupees, we used to get a lot more value back in those days. Similarly, 10 years later, the prices would further increase and we would be getting even less. This increase in prices is known as inflation. To beat the inflation, we have to invest our money where we can get the best returns. In case you don't have enough funds or experience in real estate or gold investments and unsatisfied with the fixed deposit returns, getting started with mutual funds or stock market is the best option. The latest technology and apps made investing even easier. Diversification is another factor to consider. You can invest in multiple stocks so that even if one doesn't perform well, the others will cover up the loss. You might have already heard about compounding. With time, linear growth becomes exponential to an extent that you can't imagine. It doesn't matter whether you are a student working or running a business, start investing early to enjoy the power of compounding. While making this video, we have invested 100 rupees in a stock for testing purpose. Now it has become 220, a 110% growth in a week. Imagine what if we have invested 10,000 or 1 lakh rupees.
25 दिन में पैसा डबल।
25 दिन में पैसा डबल? तो मुझे भी डबल कराना है पैसा।
If you have 1,000 rupees, invest. Only 100, invest. The market is doing good, invest. Markets are down, invest because you are getting better value for a lower price. There isn't any specific good time for investing because nobody can predict when the markets are going to rise or fall. Make investing your routine and invest regularly. We know it's not that simple. We cannot just throw our money in the stock market and expect it to grow automatically. There are many risks and challenges along the way, and the stock market isn't right for everyone. As with everything else, it takes commitment, patience, smart decisions, and steady work to make money grow over time. If any of those are missed, you may risk losing your money in stocks. But one thing to remember always is that choose wisely. Research everything about the stocks you want to invest and handpick them carefully. There are a lot of utilities online for free. Make use of them. Don't let others or news control your emotions, urging you to take any wrong steps. Make your own mistakes and learn from them. If you want us to make a complete video regarding how to open a Demat account, how to buy and sell shares, how to add and withdraw money from Demat account, tips and tricks of investing, or an in-depth review of these apps, comment below and we will come up with another video answering all your questions. Meanwhile, you can get started with any of these apps and have a self-learning experience. Also, try reading books of the investing masterminds you know so that you get to know how they think and make decisions in a split second to build their empire. We are learning every day and making these videos to make things easy for you. If you find any facts or information misleading, let us know and give us an opportunity to correct it in our next video. These videos are our small steps to keep learning and sharing our experience with you guys. And as everyone says, mutual funds and stock markets are subject to market risk. So we highly recommend you to research everything about them carefully before investing.